We got Greg here. What's up, Greg? We see
Greg
you.
Wareham.
Hey, good morning, everyone, or afternoon, depending on where you're at.
Wow, Greg had more caffeine than me.
I'm trying to tone it down a little bit.
Oh, you are. You're not doing such a good job.
I also dropped the ball on sending a hat as another side note. Now I know.
I mean, we're going to have to kick you off.
That was one of the conditions, Greg.
I don't make the rule.
Oh, you're so funny. All right, Greg, give us a quick intro as to who you are, how long you've been in the business, and what we're looking at here.
Yeah, sure. So my name is Greg Wareham. I work with the Federal Savings Bank, and I'm a national manager for their program that's called a dual employed banker program, which is really the perfect bolt-on opportunity for real estate agents to earn compensation compliantly from the mortgage side of their business. I've been in the industry since 1997, and during that time, I've always worked exclusively with real estate agents, me and my teams have. So when the law changed back in 2022, allowing a real estate agent to get compensated on the mortgage side of the business as well as the real estate side of the business for the same transaction, immediately thought, all right, what's the opportunity there and how do we carve it out? So we've really been able to carve out a tremendous opportunity for the right real estate agents.
I love that. What have you seen has been the adoption for that in the industry?
That's a great question, Tristan. So it's challenging for the industry as a whole when I look at the mortgage side of the coin. So if you are a real estate professional that's trying to get your mortgage license, you got one of two ways that you can go about doing it. You can go take the 20-hour course, pass the state test, and then you have your mortgage license and you go work for any mortgage company. However, the big challenge is having the time to take the 20-hour course, study 20 hours for the test. The flip side of that is if you work with a federally chartered bank, anyone that works for a federally chartered bank, there's no longer a need to take the 20-hour course or pass the test. That federal bank charter usurps the need for individual licensing. So we found that for us at the Federal Savings Bank, we are a federally chartered bank, and we've been able to adopt and put people under our federal bank charter to allow them a quick path, an efficient path to be able to be licensed on the mortgage side of the business. As far as on the real estate side, gosh, I mean, when you look at the pressure in our industry, pressure on commission, I think if the DOJ had their way, they'd have none of us getting paid on the real estate side. And this has really created a revenue stream that helps agents earn more money per transaction.
Okay, so how does it work?
So the way the program works is when we hire somebody, we hire them as a part-time employee of the bank, and your title is called a dual employed banker.
Okay.
What the agent needs to do from there is we get everybody onboarded, and you have to attend a 3-hour bank facilitated course. And if you've ever attended a corporate course at all, the first half of it, they talk about the bank, right? They talk about the great products that we have at the bank to help you do more real estate business.
Okay.
The second half of that course is they're showing you a scenario in our point of sale software that's called Encompass, which I think is important because it's good to understand the flow of the industry. Once you're out of the course, your NMLS number goes live, which is your mortgage licensing number, and we install 3 applications on your phone. One of them is Outlook for email. The second one is something that's called the Blend app, and that's a point of sale application for the consumer. The third one that we install is called Encompass, and Encompass is more of the software that's used from fulfillment and underwriting. All 3 of those apps you will use to be able to facilitate the business efficiently. Now, when you do come on board, we partner you with a senior banker. That senior banker is really the person that's going to be handling the mortgage portion of the transaction, is doing 98% of the work. What's important on the front end is that we're doing certain activities to stay in compliance so we can legally compensate you. That's sort of the big overview on it.
So the 2% work that we've got to do, what does that entail?
It's a great question. So a couple of things. We have to make the constructive referral. So as an example, you just showed John and Sally a house, and John and Sally are looking to get pre-approved for a mortgage.
Mm-hmm.
At the end of your conversation with them, you say, okay, the next step is I want to introduce you to our senior banker. I'll use myself as an example. Want to introduce you to Greg. I'm going to send a text message over, copying Greg. Agent sends the message. Greg gets it, picks up the phone, calls the customer and asks them, just the basic questions, how much you're looking to pay for the house, how much you're looking to put down, and so forth. At the end of that conversation, we're going to tell the customer the next step is I'm going to reply to that text chain, and I'm going to have Tristan send over your application deal. Text message goes out, Tristan copies and pastes the application link and website that we build for you. Now the consumer has the application to complete it online. Okay. Once the application is submitted, everything merges into our database. Senior banker is going to call again, go through the application, run them through desktop underwriting, and issue the pre-approval. The important things in there, Tristan, is we're never asking the dual employed banker to collect a pay stub, W-2. You're not going to lock an interest rate. You're not going to do any of that. What we did is you made the constructive referral. And that's step one of RESPA compliance to be able to do that. That's the beginning half of it.
Got it. So when we're looking at income, we're looking at possibly, and this is where you have to help us, possibly doubling our income by just jumping in with your company.
It's like making a referral.
Well, if we're closing 3 transactions, if we're closing 3 transactions a year, right? Mm-hmm. Would it be like closing 4, 5, or 6 transactions, or what does that depend on? Just so
that's a great question. I would say it's not so much doubling it. I would, depending on the commission we're earning on the real estate side, it's typically going to be about a 25 to 30% increase to income.
Okay,
I mean, that's a big increase.
That's significant, man.
It's huge.
So give us some numbers, right? Like, give us some numbers. Like,
so as an example, if someone closes a $500,000 mortgage transaction, they're paid $2,500 on that transaction.
Okay.
So they're paid 0.5% of the loan amount.
Interesting. On top of their real estate commission.
Correct.
Interesting.
So, okay, let me chunk this down. We take a 20-hour course. We get licensed. We then sign up. No, we can skip that.
You could. That's the big portion amount. And this is what makes our program so unique. There's no course.
So then we don't have to say we're a licensed mortgage person. We just say this is our senior banker.
So you're a senior banker. I mean, we're not hiding from the fact that you're a licensed mortgage person, because when we hire you at the bank, you're a part-time employee at the bank and you do have a mortgage license. Okay. The way we've been able to orchestrate this with the OCC, who's the government body that's controlling all of this on the banking side, is okay, you got to make the constructive referral. Once you've made the referral, now the contact person is the senior banker. You're selling real estate. You got to go find them a home. But it's the senior banker now that's handling that transaction. Once it goes under contract, there's a few RESPA steps that you need to complete, all of which are on your phone. I'll give you a great example. One of them is you need to initiate the ordering of the appraisal. All right. Step number 1, all on one page. Order the appraisal. Time stamps it, goes to our appraisal department, who in turn calls the appraisal management company, calls the agent. It's business as usual. Another example is you need to order the flood certificate. All right. Flood certificate, order flood. Step 2, order it, time stamp it, goes to our flood department. All steps of RESPA are handled the exact same way. All on your phone, all on an acknowledge button on the phone. What's really important is that everything gets time stamped. And it's that time stamping that you initiated those actions that keep everything compliant so we can legally compensate you for it.
Okay.
I can tell you what the time frame is.
So I'm more so from an agent perspective, wondering what the scripting is for our clients to explain that we are affiliated and how that process will be for us. And then also, what's our liability of partnering with the bank?
That's a great question. So from a liability standpoint, you'd have no more liability than you have right now on the real estate side. Prince Europe Moore is wearing 2 hats. One is the loan officer hat. The other one is the real estate hat. And all the dual disclosure forms go out to the consumer. We send all that stuff out. As far as making that constructive referral and making the customer comfortable, you just tell them, listen, I'm involved on the mortgage side of this transaction as well. I'm partnered with the senior banker. His name's Greg. Greg's going to reach out to you. He's going to review the process and what we need to do next. I'm going to send him a text message.
Yeah, I would think it would probably be no different than like if your brokerage had, a relationship with or an in-house lender,
That's a great point. Yeah, it's the same process.
Because even if you use that in-house lender or not, they still have to sign some sort of, piece of paper that says that you've told them about it if they decide to use it. So probably like similar to that, right?
That affiliated
Very
business
similar.
disclosure.
That's exactly right. Affiliated business disclosure, and the bank takes care of all of that.
I get nervous because so many of us have title insurance companies as well. So then it's almost like we're sending out the affiliated disclosure for I'm your realtor, I'm your lender, I'm your title insurance provider. And so that's where I'm like, oh, I need help scripting this. I like
Yeah, and we could certainly help you with that. It's so interesting because when you look at our industry, you look at what Rocket Mortgage had recently done with Redfin and with Mr. Cooper.
Mhm.
So they originally, the program that we rolled out at our bank, Rocket was the first company to roll it out. And they rolled it out and they failed within 12 months. And why? Because none of the agents were taking the test or taking the course.
Right.
And that barrier to entry is what we've been able to eliminate. So then they acquire the other companies, understanding that, hey, we already have the customer. So we have the customer. We know we can provide them a great level of service on the real estate side, on the mortgage side, and then also on the refinance side. And with all those things, who's going to take better care of the customer or who's going to have a higher level relationship than the agent? So the agent's making the referral. Customer's always going to trust the agent the most, and we're going to facilitate it in a really seamless fashion.
All right, question. Great. Oh, go ahead, Stacey. Should continue.
But hopefully it's helping people.
For sure.
Is there a system once we close, so we partner together, we close, is there a system to where your marketing pushes out co-branding us for future business together?
So that's a great question. So to answer your question, yes, we can do it. If you opt in to do it, we can do the co-branding. And where that becomes really important, Stacey, is the refinance opportunity.
Right.
Like one of the things that I loved in putting this together, and in this industry for almost 30 years, is never in the history of ever has a real estate agent been able to capitalize on the refinance market. And this changes that dynamic. So now if you have
Tristan will be right back. He's getting a drink of water. He's dehydrated.
He looked a little dehydrated.
Yeah.
So now with this opportunity, completely shifts that paradigm. We know that in the past 3 years, the average interest rate to a consumer that purchased a home is 7.125%. When rates drop, everybody's going to refinance. And this is a little different than some of the other refinance bubbles. It's in this market, everyone thinks they paid too much for their house. Everyone thinks their rate's too high, and everybody's paying too much for coffee at Costco. So even when we saw rates drop a little bit in the past couple of weeks, the refinance business picks up. Well, the consumer is generally going to call one of two people. They're going to call the mortgage person you originally referred it to, or they're going to call the loan servicer, the people they're making their payments to every month. And that's 85% of the time. This totally changes the dynamic. Now it's, hey, Bob, Sally, this is Stacey. How's everything going? Are you looking to buy or sell? Do you know anyone looking to buy or sell? Hey, did you refinance your mortgage? Interest rates are down. You may be able to save several hundred a month. No? Okay, let me introduce you to my senior banker, Greg. You make the handoff and the referral.
Love it. It's another extra client touch. How are your rates compared to traditional lenders and credit unions?
That's a good question. So for us, we're a federally chartered bank. Our interest rates are very sharp. And one of the things that we were very careful on, and when we put this program together, was not to pass what you're earning back to the consumer. So how it works is picture with a very aggressive interest rate. Typical loan officer is going to earn about 1% with good rates. You're literally receiving half of that money. And build it in, you're going to receive half. And I thought that was fair because from my seat, the real estate agent's the hub of everything. You're dictating the mortgage and the title and the home inspector. You're doing all of that. And you should be fairly compensated for the relationship that you brought to the table on the mortgage side as well.
Got it. I'm just looking through the chat here. There's some questions. Stacey, do you have another question while I look through this?
No, I have so many, so you go ahead. Unless
No, you go while I look.
Stacey, I'm in New Jersey, so I'm getting the storm that you're getting. It's like 15 inches of snow.
Oh, yeah, I'm not excited
The
about
snow
it.
blower's not working. I mean, I have 4 kids, so I got to get them all out there. But
Where in New Jersey are you?
I'm in Homedale, New Jersey.
Okay, I'm from Montclair.
Oh, Oh, all right. Yeah, I'm
Originally.
in Monmouth County.
I'm not there now, but that's where I grew
Montclair
up.
is a beautiful area.
Yeah, it's great.
Segue into the next question. Can you do nationwide lending?
Great question. So when we hire you as a part-time employee, you can lend nationally. So, all right, you have a buyer or you have someone that is looking to purchase a house in Florida. Let's assume that's the vacation destination, even though some of you may live in Florida. Well, all right, well, you can't represent them on the real estate side. You can refer it, get your 25% referral fee, but now you can always represent them on the mortgage side. Oh, no problem. You're buying a second home in Florida. I'm going to introduce you to one of our quality agents down there. And we're also going to get you pre-approved for the mortgage. I'm going to introduce you to Greg right now. That transaction always sticks with you. So no matter what agent they work with, you would always get compensated on the mortgage side.
Tristan, are you hydrated now?
I am, buddy. Thank you. I just drank a whole thing of water.
I'm going to need some water after all that caffeine I've had today.
Dude. Yes, you will. And so will Greg.
How'd I do? Did I calm it down a little bit?
You're doing well. You're doing good.
Thanks, guys.
How does it work with the brokerage that the agent belongs to? Does some of that fee go to that brokerage as well? Or is this independent of that? And what have you seen?
Yeah, that's a great question, Tristan. So when we hire an agent, that's independent of the broker. So it's the agent that's receiving that compensation directly. However, we do have some programs in place where if the broker's the person that's recruiting the agent to us, there can be a downline as a result of that on the recruiting side.
Someone's asking, Marcus is asking, is there a credit factor for signing up? Because he has a few agents that have some credit issues, but they're go-getters.
So here's how the process works. When we hire you, you will have to get your fingerprints done and we will do a soft pull of the credit. So it's not going to negatively impact your credit score.
Okay.
If there's issues that show up on credit, we're going to ask for a letter of explanation. If the issues are significant, like all of the credit, it's just 10 collection accounts, we probably can't bond you. Under the federal bank charter, probably couldn't move forward. On a background check, same logic applies. I mean, people have issues come up. But if something came up on your background, we're going to look for a letter of explanation. Now, if it's a financial crime in the past 10 years, probably not going to be able to hire you.
Right.
But the reality, people have DUIs. They have some things that have happened when they were at a different time in their life. Generally, we can work through all those.
Awesome.
So Tristan, that one time that we don't need to talk about, you're clear. You're fine.
We're good. It's safe. We're good. Damn. But the other time, I'm not.
The other time, no,
Yeah,
I can't.
no,
I
it
can't
doesn't
guarantee
care.
it.
Greg, question about if you've seen this, and this may apply to you, Stacey, too.
Yeah.
But we've got a team, and I'm like, this is awesome. I'm listening to this. I'm like, I want to bring this just to the team. Have you seen teams bring this on, and then have all of their agents belong to it, and then the team leader, because of the introduction to this, and because we're quarterbacking leads left and right and opportunities, do they get a piece of this as well as the rest of the agents working together? How has that worked?
So that was directed at me, Tristan?
Yeah, that one's with
okay,
you.
I'm just making sure. So it all comes down to the fixed amount of economics on it. So we have the 50 basis points to work with. When it's a team leader, someone who's running a team, this conversation we'll have with the team leader. A lot of times, Tristan, we'll license the team leader. And the team leader then will figure out compensation with the folks that are under them.
Got it. Stacey,
Yep.
go. You had a question.
I know. I'm literally all day. By the end of
You're
this,
doing awesome. That's why you're here.
I'll be like, I've joined 4 other companies by the end of this.
He has 19 side hustles by the end of this.
Holy. So if the team leader is the licensed person, then they have the app and they're going in and they're ordering appraisal, ordering flood cert. So hopefully they've got a good process for that.
Yes.
Okay. And then the Outlook thing worries me a little bit because I know a lot of us are in Gmail. So,
well, I can tell you again, my experience on it, most of the dual employed bankers, they're really not looking at their Outlook.
okay.
And when you need something, you're reaching out to the senior banker.
You're going to just text.
On
Yeah.
an app, right?
Yes. So, well, you could, or you're just texting the senior banker that you're working with. because we've given the autonomy to the dual employed banker. You can do anything you want. You have access to everything that a regular loan officer would have. But 99% of the time, it just becomes business as usual. All right, I need an updated pre-approval. I'm reaching out to the senior banker. Hey, is that appraisal back in? I'm reaching out to the senior banker. Where's the commitment? Like, that part of the industry has kind of stayed the same. You do have access to it, though. So with the apps you have on your phone, like that Blend app, you can see if a commitment came in. You can see if an appraisal came in. So you do have access, but we found that dual employed banker, real estate agent, they're just reaching out to the senior banker.
Okay. Are there multiple senior banker options, or do we just get assigned to one and that's the relationship?
Stacey, for you, it's only going to be the one that you like the most. But to answer your question, relationships are extremely important, as we all know. So we have a pod system on it. Have to make sure you're comfortable with the senior banker, and you'll always be working with the same. It'll be the same processor and same loan officer assistant.
Perfect.
Always the same people. And we found now that some of the dual employed bankers, they just reach out to the loan officer assistant. A lot of times they know more than what the senior banker knows, because they're handling the nuts and bolts on everything.
So Marcus is asking, can you explain the downline from the brokerage a little bit more?
I think that one's on a case-by-case basis, Marcus. So that may be a good conversation for you and I to have offline.
And then go to that. The more I'm listening to this, Greg, the more I'm like, I feel like this is going to be an opportunity for every agent, team, brokerage listening to this, because if we're not doing it, like you said earlier, Rocket Redfin, Zillow, everyone is already doing this. You know, the concern that everyone has obviously is legal, right? Lawsuits going left and right. How would you protect us from that? Are you always looking for us to add more disclosures, or what's the process for that?
Yeah, we've had not one complaint or issue come up, because it's clear the Federal Housing Finance Agency really governs all of us. They're the folks that came up with the ruling saying that an agent can do both, along with HUD, who runs FHA. We've run into no issues. Everything we do is compliant. I talk directly to the OCC to make sure that we stay in compliance with what they need, to make sure the program flows at a high level. The other thing that I would say, the reality is, if you ever had a client that had an issue with the bank, they're suing the bank. They're not coming after the agent.
True.
You know, because for you, you're not really the agent in that. You're the loan officer in that. And they're always going to go to the organization with the deep pockets. But we've had no issues at all, and we're not planning on having anything, because we really do have this. Compliance was by far the most important piece.
Yeah.
In buttoning that up, and because there's no sense of building it out. Being on calls like this, where there's so many agents out there that we could provide the opportunity to, we've made this ironclad from a compliance standpoint. That was important for all of you, and it's important for the bank.
Makes sense.
So when I first heard this, I thought, well, why would the loan senior banker be okay sharing with the agents? But as you're talking, I'm thinking, okay, well, here's the pie, and you're just making the pie this big. So let's just do a lot more deals.
That's it, Stacey. So say someone does 10 purchase transactions per year, as an example. Well, they got a great relationship with a mortgage person they're working with right now. They send you 2 deals a year, 3 deals a year. The key for us is, all right, well, how do we get 6 of them? And how do we do it from a partnership standpoint? That was, putting the program together, it's a paradigm shift. So after all the years being in the mortgage business, no matter how great the relationships I've had with agents and brokers and my team has, we're always in the vendor space. It's just the nature of the relationship. This changes that paradigm. Now we're business partners.
Yeah.
We all work together around the same goal. And it's important for us that you're selling more real estate. And as a bank, we've backed into that. And I'll give you a quick example. We have 5% down for a vacation home, 10% down for an investment property. We do up to a $50,000 unsecured line of credit at the closing that can consolidate debt to make the buyer qualify. We've positioned ourselves to make sure that the consumer has the best home lending and real estate experience, and we backfilled our portfolio money with things that help you put more people into more homes.
There were two questions earlier, construction loans and commercial loans.
So we do. So commercial loans we handle. We don't handle a lot of them, but depending on the complexity of it, we may send it out to a company we're affiliated with. Construction to permanent financing, yes, we do that. We're actually the largest. We do a VA 100% financing construction loan. We're the largest lender in the country for that product. So we do a lot of it.
Awesome.
We're a veteran-owned bank, so the VA portion is really important to us.
Do you keep any files in-house?
What do you mean?
As in not sell them after we close?
Oh, that's yeah. So we do. So anything that's portfolio is staying right on our books.
Okay.
Jumbo mortgages, we generally sell those after closing. When you look at conventional Fannie Mae, Freddie Mac, FHA, we may or may not, depending on the appetite for it in the marketplace. And I know we're coming up on time here. I just wanted to say one more thing. Is if someone's earning $30,000 a year doing this, $30,000 a year, it's great, right? You can go on vacation, you can buy different things, but I would love to see, and what we try to encourage people to invest it back in your core business. If you earn $30,000 and $30,000, your lead acquisition cost is $100 a lead. It's 300 leads. It's how much real estate business can you do? Does that result in another 10 transactions, 20 transactions? Is it $5, $10 million more in volume for you? Because you're going to earn at least 2.5% on that. And this model is more about not you being a loan officer or a dual employed banker, mortgage person. This is about funding your core business so you can make hundreds of thousands of dollars more as a real estate agent. Never going to make more money, as you all know, than you will from real estate.
Yeah, I love that. And that's a good ending to this, Greg. So everyone, please scan that QR code. It'll take you to the other link that we've been sharing with you. This way you can ask any questions to the Federal Savings Bank. Greg may or may not be the one that gets back to you directly. It's probably one of his team members, but this isn't the last time you'll see Greg, because we're all very interested in doing this. In fact, all of us should at least look at it because it's a massive opportunity to add more revenue to you. So
yeah, there's a lot of questions. We can't get to all of them. Greg, would you be comfortable with people reaching out to you and just kind of like asking a couple questions?
Sure, of course.
Okay,
of course. And we can set up a separate webinar, whatever's convenient for everybody.
Can they find you on LinkedIn, or where should they go?
They can LinkedIn. You can Google me. I can put my email address in here.
Are you sure you want to do that? I'm just 300 people watching.
So I can put my email address in here.
Greg.
Say again. I'm sorry.
Let them find you on LinkedIn. So it's Greg Wareham. WAREHAM.
Yes.
So Greg Wareham. Think of it that way.
Thanks,
find him on LinkedIn. Drop him a message.
Well, listen, guys. Thank you so much.
Thank you, Greg. We appreciate you.
Man. This is awesome.
My pleasure. Thanks for having me. I appreciate you all.